What if I told you that holding just 2000 XRP today could completely change your financial future in ways most people are not even thinking about right now? And while everyone is chasing unrealistic dreams of millions of coins, the real opportunity might already be sitting in a number that feels small, but could become extremely powerful if the market moves the way some analysts expect. So before you ignore this idea or think it sounds too simple, you need to understand why serious investors are quietly focusing on accumulation strategies like this, and how timing, patience, and positioning could matter far more than the total number you hold. Now, when people hear a number like 2000 XRP, the first reaction is usually doubt, because in the world of cryptocurrency, there is always this mindset that more is better, and that unless you are holding huge amounts, it is not worth it. But that thinking often comes from misunderstanding how markets actually grow over time and how percentage gains work in assets that are still developing their full potential. The reality is that XRP is not just another random token floating in the market. It is designed with a specific purpose, and that purpose is tied directly to global financial systems, cross border payments, and institutional use cases that could drive long term demand. When you look at XRP today, many people focus only on its current price and compare it to other cryptocurrencies, especially those that have already had massive runs. But what they fail to consider is that XRP has been through a unique journey, including legal challenges and regulatory pressure, which has held back its full growth potential compared to other assets. Because of this, some investors believe that XRP is still undervalued relative to what it could achieve if those barriers are fully removed and institutional adoption accelerates in the coming years. Now, think about this in a simple way. If XRP were to reach even a modest price target compared to some of the more extreme predictions you see online, the value of 2000 XRP would already become significant for many people. But if the market enters a strong bullish cycle and XRP gains traction due to real world use, the impact could be much larger than expected. This is where the idea of holding a specific amount becomes important, not because it guarantees success, but because it creates a position that can benefit from potential upside without requiring unrealistic capital. Another important factor that many people overlook is accessibility, because not everyone has the ability to invest huge amounts of money into crypto. And this is where numbers like 2000 XRP become psychologically powerful, as they represent a target that feels achievable for many individuals while still offering exposure to a potentially growing asset. This balance between affordability and potential upside is what attracts attention, especially for new investors who are trying to find a practical entry point without overextending themselves financially. At the same time, it is important to stay realistic, because the crypto market is known for volatility and prices can move in both directions quickly. So, while there is potential for growth, there is also risk involved, and no one can guarantee future price movements with certainty. This is why understanding the fundamentals behind XRP, its use cases, and the broader market trends becomes essential before making any decisions. You will start to see why this specific number has gained attention, how different price scenarios could impact its value, and what factors could influence XRP's future growth. But more importantly, you will begin to understand whether this idea is based on real potential or just another hype driven narrative that spreads quickly in the crypto space. When you start to break this idea down further, the real question is not just whether 2000 XRP is enough, but what enough actually means in the context of your personal financial goals and expectations. Because for some people, enough means life changing wealth, while for others, it simply means building a strong financial cushion that can grow over time without requiring constant attention or high risk strategies. This difference in mindset is important because it shapes how you view XRP and what you expect from holding a fixed amount like 2,000 coins. If you look at how markets behave, especially in cryptocurrency, you will notice that price movements are rarely linear, and instead, they often happen in waves where long periods of slow growth are followed by sudden bursts of rapid expansion. And this is where positioning becomes critical because those who accumulate during quiet phases are usually the ones who benefit the most when momentum finally builds. In the case of XRP, many investors believe that it has been in one of these quieter phases for a long time due to external factors, which means that if a strong breakout happens, it could move faster than people expect. Now, imagine a few simple scenarios, not extreme predictions, but realistic possibilities based on how crypto markets have behaved in the past, because this helps you understand the potential without getting lost in hype. If XRP reaches a moderate level where it gains steady adoption and climbs to a higher but still reasonable price range, 2000 XRP could represent a meaningful return compared to the initial investment. And this alone is enough for many people who are not chasing unrealistic numbers. But if XRP enters a stronger growth phase where institutional interest increases and utility becomes more visible in real world applications, then the value of that same amount could grow much more significantly. Another layer to consider is time because many people enter crypto expecting fast results. But the reality is that some of the biggest gains in this space have come to those who were willing to hold through uncertainty and wait for the market to mature. XRP in particular has tested the patience of its holders, and this is why discussions around specific amounts like 2000 XRP often come with a long term perspective rather than a short term trading mindset. The idea is not about quick profits, but about positioning yourself early enough to benefit if the asset reaches its intended potential. There is also the psychological side of investing, which plays a much bigger role than most people realize, because having a clear target, such as accumulating 2000 XRP, can help create discipline and reduce emotional decision making. Instead of constantly buying and selling based on market noise, investors with a defined goal are more likely to stick to a plan, which can lead to better outcomes over time. This approach is especially useful in a market like crypto, where fear and excitement can drive people to make impulsive choices that they later regret. At the same time, it is important to understand that not everyone will have the same outcome even if they hold the same amount of XRP, because factors like entry price, timing, and overall market conditions will all influence the final result. Someone who accumulates during lower price levels will naturally have a different experience compared to someone who enters at a higher price point, and this is why strategy matters just as much as the number of coins you hold. Another point that cannot be ignored is diversification. Because while the idea of holding 2000 XRP may sound appealing, relying entirely on a single asset always carries risk, no matter how strong the fundamentals appear. Smart investors often balance their portfolios to reduce exposure to any one asset, which helps protect them in case the market does not move as expected. This does not mean XRP lacks potential, but it highlights the importance of managing risk in a thoughtful and controlled way. As you continue to explore this topic, the focus will shift toward deeper factors that could influence XRP's long term value, including adoption, market cycles, and the role it could play in the future of global finance, because understanding these elements is what will ultimately help you decide whether 2000 XRP is simply a number or a strategic position that could hold real value over time. As we go deeper into this idea, it becomes very important to understand what could actually drive the value of XRP higher over time, because without strong reasons behind price movement, any number, including 2000 XRP, becomes just a random figure with no real meaning. The strength of any asset always comes from its utility, its adoption, and the level of trust it builds in the financial system. And this is where XRP starts to stand out compared to many other cryptocurrencies that are mainly driven by hype rather than real world use. XRP was created with a clear purpose, which is to make cross border payments faster, cheaper, and more efficient, especially for banks and financial institutions that currently rely on slow and expensive systems. When you look at how money moves globally today, you will notice that it often takes time, involves multiple intermediaries, and comes with high fees. And this is exactly the problem XRP aims to solve. If this use case continues to gain attention and adoption, it creates a strong foundation for long term value because the demand for XRP would not just come from investors, but also from institutions that actually need it for transactions. Now, think about how this connects to the idea of holding 2000 XRP, because if the asset becomes more widely used in real financial systems, even a relatively small amount could benefit from increasing demand. This is different from purely speculative assets, where price is mostly driven by trends and social media hype, because in this case, there is a functional reason for the asset to grow. However, it is also important to understand that adoption does not happen overnight, and large financial systems move slowly, which means patience is still a key factor for anyone considering a long term position. Another major factor that has influenced XRP's journey is regulation, because for a long time, uncertainty around legal issues has affected how investors and institutions view the asset. When there is a lack of clarity, large players tend to stay cautious, and this can limit growth even if the underlying technology is strong. But as regulatory situations become clearer over time, confidence can start to return. And this often leads to increased interest from both retail and institutional investors. This shift in perception can play a big role in price movement, especially if it happens during a broader market uptrend. Market cycles are also a key part of this discussion because cryptocurrency markets tend to move in patterns where periods of accumulation are followed by strong bullish phases. During these bullish phases, assets with strong narratives and real utility often perform better because they attract both new investors and larger capital inflows. If XRP enters such a phase with improved regulatory clarity and growing adoption, the impact on its price could be significant. And this is where holding a fixed amount like 2000 XRP could start to show meaningful results. At the same time, it is important to stay grounded and avoid getting carried away by extreme price predictions that are often shared online. Because while it is possible for XRP to grow, expecting unrealistic numbers without considering market limits can lead to disappointment. A more balanced approach is to look at different scenarios, including moderate growth, strong growth, and even slower than expected progress, and then consider how each scenario would affect the value of your holdings. This way, you are not relying on a single outcome, but instead preparing for multiple possibilities. There is also the factor of competition because XRP is not the only solution in the space of digital payments, and other technologies and cryptocurrencies are also trying to solve similar problems. This means that XRP's success will depend not only on its own strengths, but also on how well it performs compared to alternatives. If it continues to build partnerships and demonstrate efficiency, it could maintain a strong position. But if competitors gain more traction, it could limit its growth potential. This balance between opportunity and competition is something every investor needs to keep in mind. As you connect all of these points together, you start to see that the idea of 2000 XRP is not just about the number itself, but about the bigger picture that surrounds it, including utility, adoption, regulation, market cycles, and competition. These are the forces that will ultimately decide whether that amount becomes something truly valuable over time or remains just another holding in a highly unpredictable market. And understanding these elements is what helps turn a simple idea into a more informed perspective. At this stage, it becomes even more important to focus on how real investors actually think when they decide to accumulate assets like XRP, because in most cases, they are not reacting to short term price movements, but instead building positions based on long term expectations and broader financial trends. This is where the idea of holding a specific amount, such as 2000 XRP, becomes more strategic rather than emotional, because it shifts the focus from guessing the market to preparing for possible future scenarios. One of the key things experienced investors consider is liquidity and market accessibility, meaning how easily an asset can be bought, sold, and used across different platforms and institutions. XRP has always been designed with liquidity in mind, especially for cross border settlements. And if that function continues to expand, it naturally increases the importance of holding the asset. When liquidity improves in a market, it often leads to more stability and stronger participation, which can positively influence price behavior over time. Another important angle is institutional involvement, because when large financial organizations enter a market, they usually do so with long term plans rather than short term speculation. Institutions are typically more interested in efficiency, speed, and cost reduction. And if XRP continues to align with these needs, it could gradually become more integrated into financial systems. This kind of adoption does not always reflect immediately in price, but when it does, the impact can be significant, because institutional capital tends to be much larger and more stable than retail investment flows. Now, when we connect this back to holding 2000 XRP, it becomes clear that the value of this amount is not fixed, but instead depends heavily on how deeply XRP integrates into real world financial infrastructure. If adoption remains limited, the impact of holding any amount may stay relatively modest. But if adoption expands across payment networks, remittance systems, and banking channels, then even a smaller holding could benefit from increased demand pressure over time. Market psychology also plays a major role in how assets move, because once confidence begins to build around a cryptocurrency, it often leads to a self reinforcing cycle where rising interest attracts more buyers and more buyers push prices further upward. This is especially true in crypto markets, where sentiment can shift quickly. If XRP reaches a stage where confidence returns strongly, especially after regulatory clarity and stronger adoption signals, it could trigger renewed interest from both new and returning investors. However, it is also necessary to understand that markets do not move in a straight line, and even strong assets experience corrections, consolidation phases, and periods of uncertainty. These phases can test investor patience and often lead to emotional decisions, especially for those who are not prepared for volatility. This is why having a clear plan or target, such as accumulating a specific amount, can sometimes help reduce emotional trading and encourage more disciplined behavior over time. Another factor that should not be ignored is global economic conditions, because cryptocurrency markets are increasingly influenced by broader financial trends such as interest rates, inflation, and liquidity in traditional markets. When global liquidity is high, risk assets like crypto tend to perform better. And when liquidity tightens, markets often slow down or correct. This means that even if XRP has strong fundamentals, external conditions can still influence its short term performance. In this environment, holding 2000 XRP is not about guaranteeing a result, but about maintaining exposure to a potential opportunity while understanding the risks involved. It is a position that reflects belief in long term development rather than short term speculation. But at the same time, it requires awareness that timing, market cycles, and external conditions will all play a role in shaping outcomes. As the discussion continues, the final part will bring everything together, focusing on realistic expectations, possible financial outcomes, and a clear understanding of whether this approach makes sense for different types of investors, while also including an important disclaimer about financial risk and decision making. When everything is brought together, the main question still remains simple but very important. Is 2000 XRP really all you need, or is it just one possible approach among many in a highly uncertain market? The truth is that there is no single number that guarantees financial success, because the value of any investment depends on multiple moving factors such as timing, entry price, market conditions, adoption levels, and overall economic cycles. 2000 XRP can look small to some people and meaningful to others, but its real significance only becomes clear when it is placed inside a long term perspective. If XRP continues to develop as a global payment solution and gains stronger adoption from financial institutions, then even a moderate holding could potentially benefit from increased demand over time. In such a scenario, the growth would not be driven by hype alone, but by actual usage in real world financial systems, which is always a stronger foundation for long term value. However, it is equally important to understand that adoption takes time, and progress in financial infrastructure is usually slow, carefully tested, and heavily regulated before it becomes widespread. At the same time, investors must stay realistic about market behavior, because even strong projects experience volatility, corrections, and periods where price movement does not reflect long term potential. This can lead many people to lose patience or make emotional decisions, especially when expectations are not aligned with reality. Holding a fixed amount like 2000 XRP does not remove risk, and it does not guarantee profit, but it can represent a structured way of participating in the market without overextending financially. Another important point is that financial outcomes are never the same for everyone, even if they hold the same asset. Entry timing plays a huge role, because someone who accumulates during lower price ranges will naturally have a different experience compared to someone entering during a peak phase. This is why strategy, discipline, and patience often matter more than simply choosing a number to hold. It is also essential to remember that crypto markets are influenced by global economic conditions, regulatory developments, and investor sentiment, all of which can change quickly. Even if XRP has strong fundamentals, external factors can still impact short term performance. This is why relying on a single expectation or prediction can be risky, and a more balanced mindset is always safer when dealing with volatile markets. So instead of thinking in terms of is 2000 XRP enough, a more practical question might be, what does this amount represent in my personal financial strategy, and am I comfortable with the risks involved? For some investors, it may represent a small but meaningful long term position. For others, it may be part of a broader, diversified portfolio. And for many, it may simply be a starting point for learning and gradual accumulation. In the end, the real value does not come from the number itself, but from how informed, patient, and disciplined the investor is over time. Markets reward preparation more than emotion, and long term thinking often plays a bigger role than short term excitement. XRP may or may not reach the levels some people expect, but what remains consistent is the importance of understanding what you are holding and why you are holding it. Financial disclaimer: this content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. Cryptocurrency markets are highly volatile and involve significant risk, including the possible loss of capital. Always do your own research before making any investment decisions, and consult with a qualified financial advisor if needed. Past performance is not indicative of future results. If you found this breakdown helpful, consider subscribing for more crypto insights and updates, and stay informed before making any financial decisions in the market.